building the right team is the most fundamental thing that you can do. Getting people aligned to the mission and keeping them pushing forward, I think, is incredibly important.
With us today, we have two amazing founders. Firstly, we have Bastian, the founder of Wajve. Wajve is a financial app for Gen Z that combines banking, financial education, and advice all in one app. Founded in 2021, Wajve recently raised an impressive 5 million euros. Prior to co-founding Wajve, Bastian founded another FinTech, which I'm not going to pronounce because it's in German, which enables students to find the best loans and scholarships to finance their studies. And it was approved as the first digital platform to offer the German government-backed study loan from KfW. So welcome, Bastian.
For having me. And it's called student financing. So maybe something we practice all together later on.
We also have Feras. So Feras is the founder of the YC-backed Baraka, which is a commission-free online trading app for MENA. It enables anyone to invest in a wide variety of ETFs, stocks, and US-listed securities, as well as fractional shares with as little as $1. Baraka also has a paid tier for more savvy investors. And apart from trading, Baraka also aims to educate its users about all things investment. Since its launch in early August this year, Baraka has achieved over 5,000 app downloads and over 10,000 users on their waitlist. So welcome as well. And last but not least, who on earth am I? My name is Maya Caddle. I am a full-time product manager, and I'm about to join a new African crypto startup led by one of the leaders in the crypto space in Africa. Before that, I worked for a tech unicorn based in London as a product manager focused around expansion localization, led them actually into the Arabic-speaking world. So Saudi Arabia and UAE were our key markets. And before that, I lived in both Hong Kong and Kenya and consulted a Tanzanian telecom on the side about building mobile money products for the Muslim community in Tanzania. So I have quite a good grounding in fintech and especially looking at the underserved communities. But let's get to the real crux of this. Let's have our fun discussion. So one of the first things I actually wanted to ask you, both of you, is could you tell us more a bit about your target customers? Because I guess not everyone will really understand who you're trying to serve. What are their needs? And it would also be helpful to understand why do you think they've been overlooked for such a long period of time? Perhaps you could start this, Feras.
Yeah, it's a good question. I mean, we're understanding them more and more every day, but I think generally they're young or they want access to financial products, but they want to be spoken to in a certain way. They want to understand in a certain way. They want the ability to back the companies and the causes that they feel strongly about. And I think that stuff has been lost in traditional financial markets. I think it's very the way it's done by the incumbents is that it's focused on a certain demographic that really doesn't cater in that way to this younger generation. And so we see quite a bit, we produce quite a bit of content on our platform, and we speak to our users in a way that they wouldn't necessarily expect the financial platform to speak to them, in a certain tone of voice and with a certain kind of language, and we just try to make it more like a lifestyle offering opposed to a kind of like a financial product. And I think that's what people want these days. I mean, that's what we think that they want. But yeah, I mean, this is a little bit about what we're learning.
I imagine there's some synergies with that with Gen Z, Bastian, right?
Many of them, I think. So first of all, I have to maybe split it up a little bit because, as it was already mentioned, we started with first of all, I started myself with a very generic approach. I tried to change banking for my personal generation, for the Generation Z. 6 years ago, as I came to Berlin and tried to fight the word, but I understood that first of all, before we have to take care about the target group, we have to initially understand a really core issue that has to be solved. And we understood that from our perspective in Europe, even if it's completely underrepresented compared to the US, there's still 80% of this new generation or students within this new generation, higher education students, that has issues with study financing. So this was more or less the first learning we've made. So our core target group then was, of course, pretty clear addressable. People that would love to have a higher educational degree somehow that needs money for their lifestyle costs. And yes, an issue could be tuition fees, but first of all, it's about paying your rent, it's about paying your food. And that means 12 million students all around Europe needs every single month any support, any external support for covering their monthly costs. This is first of all the initial target group we faced. And out of this, and this I think the development process over time we've understood, we supported this group to understand and get access to every single financing opportunity that exists on this market, from long-term financing, student loans, and income share agreements, educational funds, government support, whatever you can have in mind, until really short-term financing. Oh, I need 50 euro right away now in this moment. In one platform, that was the initial solution we have to deliver. So bring liquidity for this specific target group generation, that students that would love to study somehow and get a higher educational degree in minutes. And it lasts before somehow months, unfortunately, 2.5 months on average. And now it's accessible in 10 minutes. And in this 10 minutes, it's even on the account. We have that, okay, if it has to be on the account, it makes sense to evolve also this overall target group and make it more to Gen Z and not only limited to these students that need external financing. That's why we decided to extend our general approach, extend our target group to Wajve, building up this banking infrastructure, this banking app for the entire generation. Because, and this is a pretty interesting study we've made, and sorry, it should not be a very long monologue, but a pretty interesting study we've made at the beginning of this year together with Cindy, one of our investors, that we understood it's not a local issue. So this Generation Z still have the same issues with financing all over the world. So we understood that there's the same issue with saving money, for us, as you said, and learning about investment in Germany, in France, in US, as well as in Japan. This is a thing we've understood talking to 1,000 students and 1,000 participants within this Generation Z. And so more or less we understood, first of all, it's pretty similar to our core target group of study financing. New generation needs, first of all, liquidity whenever it's necessary in the right moment. This is a core need, and additionally to that, we maybe come to people that are in their job nowadays and would love to extend their liquidity and make more out of this, and now maybe can save and invest in a more comprehensive way. So this is more or less the involvement of our target group, from really narrow students, higher educational students, needs liquidity for study financing, specific use case now to bring liquidity or give them access to liquidity in the right context. And then over time, we will develop to a platform where you can grow this liquidity we've provided, or you receive from your income on a daily basis, really easy accessible within the app with Wajve. So the challenger bank for this new generation.
One of the things that sprung to mind when you both were talking is, a lot of financial institutions, they really claim to promote financial inclusion. And I think you both touched upon this slightly, but I wanted to delve into it more. What do you think these traditional financial institutions do wrong? Is it simply in terms of how they package their products? Is it how they communicate with users? Or is it more nuanced than that?
I think first of all, it's about they believe that somebody's interested in doing finance. First of all, it's the basis. We need finance to interact with people. We would love to live our life, and finance is necessary for having these interactions, for having these fun in our on a daily basis. So more or less understanding that nobody takes care in general about finance. Even if you're under pressure, your first thing is not like, oh, it's important now to take care about finance. Your first idea is like, where do I get my liquidity from? So more or less, it's quite often not a self-fulfilling prophecy. And we believe that, first of all, it's not necessary to tell them finance is important, first of all. And I think Feras is also the thing you said already, and you mentioned, it's a lifestyle necessary, or you need this for your lifestyle. So we make it a lifestyle product for you, so that you have no restrictions in your daily life, and even then you have fun using the app. Getting, for instance, we have a newsletter that's called even if you have a name that's called Wajve, nothing should be limited compared to a banking product. But this newsletter Wajve, this was only a small test, and nowadays we see 40% of our waiting list signups reads this pretty simple newsletter, one specific topic that we select, like why the Olympics are still named 2020 and not 2021. we explain this in a 2-minute snippet, and 40% of our waiting list signups read this newsletter every single week. So make it a way more fun, explain these things way easier. Definitely helps out, and believe that there are many, many, many use cases in our daily life. People would love to understand in an easy way. Traditional banks takes care about, first of all, explaining finance. And explaining finance is not pretty sexy anyhow. In any case, this is our perspective. Feras, what about you?
I think you've covered most of it, quite honestly. But I think communication is a key element. I think that before the likes of Robinhood and these other kinds of platforms that really changed things, traditional finance didn't really address a younger audience, did they? I mean, they didn't. The color schemes, the pictures, the images, the words. It just didn't really suit a younger audience at all. And it was coming from a place of being a necessity and almost like a privilege. You need to do this banking, you need to have a credit card, you need to be offered this service to become something where became very competitive very quickly, because all of these kind of challenger fintech platforms realized that actually if you make something that people really want to use, it's actually quite a great wedge into this kind of business, because it just wasn't being done. And so it's become a lot more user friendly. And now you're seeing that not only do you have digital banks, just global challenger digital banks, but you have digital banks for communities, right? For younger people, for immigrant communities, for all sorts of communities. What's happening is that it's being bifurcated even further now into these kind of subgroups, sub communities. And that's really just about communication and serving specific needs, the specific needs of certain communities, which is really interesting. And yeah, it just comes back to this communication point and being able to find something that you can unite around. So it's really interesting. Massive change.
I mean,
small thing to add. Sorry, Maya,
Go on.
for interrupting you, but I really agree with this and solving a specific issue first. Yeah, so it's not like, okay, having this general approach of we can deliver something pretty easily in minutes. This is cool, but first of all, it's about finding a clear issue that has to be solved for this specific group of minorities or of generations. I think this is the core key that not a traditional incumbent has time for now. They have to deliver in a short time, and that takes care about minorities that has different issues that could be solved with an overall generic product. So more or less would definitely agree, and maybe make this small addition.
So that actually really nicely leads on to my next question, because these groups, these communities have been historically overlooked. They have a lot of financial needs as well. So how did both of you go about determining which product or which services should be part of the MVP version of your company? How did you determine the user's greatest? Do you want to go first, Feras?
I'll go first. Look, I think when we were first looking at it, what we realized was that it has to just be as simple as possible. And so as easy, as simple, and as, not as intimidating as some of these other apps. And so if you can accomplish that in an easy way somehow, I think that solves, 60 to 70% of the problem for the most part. It's just creating a product that is intuitive in nature. And so in terms of features and products and different services and stuff, I mean, these things get built over time. And I think partly our mistake was that we tried to do too much too early. And what you end up seeing is that you don't have any real data. 100 people testing your app telling you how awesome it is not what it's like when 10,000 people are using your app. It's completely different, actually. And so you probably should hold off as much as possible as before you launch these different features and products. It's really just doing one thing, doing it really well. And so I guess that we were trying to do that. We're still trying to do that, to be quite honest. I mean, trying to create like a simple, intuitive product and then go from there. So yeah, so we tried to make it as simple as possible. Buy, sell, what's the easiest flow to buy, sell a stock, least intimidating, and a lot of learning on that side. It's still a very iterative process, but the more data you have, the better it is. So that's been our experience with that.
Quick question before you answer my initial question, Bastian. So Feras, you mentioned that, it's a constant learning process. What has been the most surprising thing that you've learned thus far that you didn't expect your users to do, or how, you didn't expect your users to behave or need something?
That's interesting. I could probably give you a very detailed answer. I could give you a very high level answer, like, on a very detailed basis. Some of the funding behavior has been really, really interesting for us. Like 55 to 60% of our customers transfer less than $100. And they then follow up with you incessantly for their money to be credited. And then immediately they transfer a lot more money, And so what's interesting is that people still want to test. Like they still want, I just want to make sure my wire got there. And it's like, okay, well, now it's gotten there. And then they're just much more easy about the process. So building trust, I guess, so that's the very detailed answer. I think the more high level answer is kind of like building trust takes time, and it takes, you could lose it in a sec, but it does take time. And I think, you have to build it up over time. I kind of thought like, oh, we'll turn the lights on and we'll just go. It's not really like that. It takes a little bit of time for people to get accustomed to you. And people ask questions, they check our, they want to know about our financial licenses, and they check our register and, everything. It's great. But like some of that stuff probably, because I haven't done that myself, probably surprised me a little bit more, but it's a good thing. People are conscious.
I think that's one thing that sometimes people overlook when they think about fintech. That fintech, it's about your raw money, right? So trust is one of the most important currencies or services that you can provide. And I've seen it, I've spoken to loads of founders, primarily on the continent of Africa, who've been building fintech products, and how trust can go like that. And that it may not even be your fault. It may be that a service that you rely on is out or goes down. You have to therefore make sure that your customers can still do what they need to do and communicate with them really clearly, really concisely, answer all their needs and their worries, because at the end of the day, it's their hard-earned money that they're parting with. And it's a fintech, it's an unknown entity for them, which is why I guess it's always interesting successful for referral links are for fintechs, and whether that changes users' behavior. Does it, just because, let's say, I refer you, Feras, does that mean that you're less likely to need to test out and put a test amount? Are you more trusted? I don't know if you have that information as of yet. Maybe it's still early days, but it's always an interesting thought that I have.
Yeah, I mean, it's still early days for us on that, but yeah, I take your point. I mean, I do think increasingly people are making decisions more on a communal basis, and so back to that first point, different kind of digital banks or different offerings for subgroups, sub demographics, or whatever. I think people are really relying more and more on their communities, and so if I'm referred something by a friend, probably take it more seriously than if it's referred by somebody else outside of that group, and then if it's not referred at all. So yeah, I think that it even applies in the app as well. Referral links work, that stuff works, but I think it's really about creating engagement with the community and building it out from there. So I agree.
Definitely. I think community is one of the hot words of startup tech ecosystem of this year, and it's true, because we're all social beings, and it's been overlooked, or communities have been viewed in a very narrow way, just with social media, social networks, but they feed through in so many different ways, which is why perhaps you're seeing all of these startups becoming more social in nature. But to go back to the initial question, Bastian, so you get a chance to answer it as well. So initially I had asked, how do you go about determining? Yeah, how did you go about? Sorry, go on.
No, sorry. There's a short delay, so I would not interrupt you. Maybe you can say your sentence and then I will start.
So the question was, how did you go about determining which products to really focus on as part of your MVP? How did you determine what were your users' greatest needs?
Yeah. So I think, first of all, it was more or less a really natural development out of this core product that we initially developed. So we understood that this generation, or more or less these people we served before, has a clear need. They will never be, or it's their goal to be never out of money, out of liquidity when it's necessary. So we understood that, first of all, we have to identify all situations where they maybe need money and this is not accessible due to many external effects. So it could be first of all because, and I think this is the most obvious thing, because they have no cash on their account. Then we have to deliver any opportunities that we can integrate. So more or less study financing opportunities could be an overdraft. It could be something that we now understood even before the first product launch. We've tested a user cohort out of our initial study financing product that this cohort has to wait 6 weeks for their payout of the student loan. And we did this payout initially in minutes out of our own balance sheet. So we've paid out this student loan in real time. And out of this, we understood, of course, this could be also another opportunity. So they're eligible for a product. They maybe has access, but not at the right moment. We should give this money in advance. So this is the second check mark we've made. So giving opportunities, providers that can deliver this pay on this liquidity on a month-over-month perspective, like a student loan or an overdraft on the day-per-day perspective. Maybe they can get their salary, their student loan in advance. This could be another option. But this was the core basis that brought us to the idea, okay, we now have to enable an account, a fully fledged current account, more or less, to this user group, because then it makes it way easier for offering overdraft, offering advanced payout in seconds and not in days. This is also, I think, an improvement we've made. So initially, it's like we did many user tests every single day. So on average, we have 10 user days out of this initial waiting list group every single day, and try to understand, okay, what are the core issues of this user group, of this initial cohort, and then I think deep dive into this initial needs. Liquidity, having money on their account. This is of course one issue, but it could also be having the opportunity to pay with your smartphone. So mobile payment as distributed in Germany as it should be. So this could be an issue as well. Or if you lost your phone, or you still not have access to this right now, get this card. So different devices that gives you access to the liquidity. Maybe it's a little bit basic, a little bit generic. But we understood that, yes, it is still an issue, since most of these Generation Z people have their account at a community bank. And this community bank still have no debit credit card. They still have no advanced payout or free overdraft for this new generation. So more or less giving this underbanked or somehow not very well served generation a new financial home out of our core, and everything comes out of our core use case, core platform of study financing. We understood, okay, liquidity is still an issue, and we can improve this over time with saving rules. This could be an option, of course, with amazing opportunities to invest, but this is then the next step, making more out of this initial liquidity. So pretty natural process out of this core platform we've developed. I think the best data, Feras said, better data is key. We have 120,000 students since 2018 that use this platform, and asking 120,000 students quite often what do they need. I think that helps as well, getting really deep insights. Which moment we should support. We have the transparency when somebody's moving house. This could be for the first time having your own flat. This could be a use case that additionally where we can support. And out of this, user interviews every single day. This is the short answer. Every single day we've identified the core is liquidity. And then the next step will be guidance and making more out of money in the right context. And this is how we define our functionalities overall, the MVP and next stage.
I think, as in, I'm a product manager and I'm a very user-led product manager. So I love the fact that you put that first, right, in terms of actually, both of you, in terms of actually engagement with users, because I think there's a lot of people, unfortunately, who think that they know their users and therefore they don't really need to engage with them as much. And I think that's especially true when it comes to entering underserved markets. There's a lot of assumptions. So we've seen that in the past where Western companies have entered emerging markets and assumed, right, same sort of age group, they have the same needs. It's like, even for example, with what you said, Bastian, in the UK as a student, of course you have an overdraft. Like that's just a default. You have contactless everything. But there's differences even in between countries in the developed world, and I think it's really important for anyone out there who's building to make sure that you're always really engaging with and listening to your user and really making sure you know their needs, not just what you think their needs are.
A small addition, even if these things are available, you still need this guidance getting the access or the knowledge. Or I think if it was an experience you've made within our studies, we ask why this Zoomers, these people from out of this generation, that still not invest, and 80% said they have no idea how to do this. So this is impressive. So it's accessible in real time every single day, but they have no guidance getting access to these opportunities or getting the first approach how to start with. Still an issue, right?
So then one of my questions is, because people talk about financial exclusion, they typically talk about it in almost a binary way. So it's either about access or it's about education and understanding. And I personally think it's probably a marriage of the two. But from both of your experiences, would you say it's more about education for your users, or is it more about access, if you were to try and weigh it up? Bastian, you could go first. You could go first as you were muted first.
From my perspective, more or less having the knowledge and the trust in yourself to start. So quite often, I think you have heard these things out of your friends or from your friends, from out of your community. But even then, my girlfriend still does not use any broker. So I'm telling her every single day, so let's do this together. It's pretty simple, but quite often you have the fear doing a mistake, and then I have to do this on my own later. And my friend is still not there, and so my boyfriend can't ask him. So more or less, I think this knowledge, and we believe knowledge has to be educated in the right context. Not so you using courses every single day. This could be fun for sure, but it's like sitting in university and then 1 month after you forgot close to everything. So more or less, it's like having the right context, doing the intro and explaining that all these questions were asked because we would love to prevent somebody from stealing the identity of this customer, not because we would love to ask so many data points, get so many data points. It's about preventing somebody and giving these underlying reasons and giving these underlying issues, make them transparent. I think it's the best education you can deliver. So from our perspective, the education of it does not mean having courses and learning step by step in the right context, give the user the core underlying reason why we do, why we express, why we recommend something. And from our perspective, this makes things way easier. Besides the excess of this, it's a combination. But if I have to choose, and I would love to choose, it's the knowledge I would take.
So I'm going to jump in here. I have a theory on this. I mean, I think it's a little bit of both, like Bastian mentioned, access, education, but I really think it has a lot to do with upbringing. And my feeling is that there are a lot of people in the world that have grown up knowing about investing and knowing about, wealth generation and, compounding interest and the things that, some people just take for granted. And then there's a lot of people who just don't know about that. And it's kind of instilled in you in some way at a very early age, but not everybody in the world gets that benefit. And I think that if you have that, you take it for granted. And if you don't have it, you're severely underadvantaged. And I think what's really, really interesting now is that there's a whole new generation of investors, the Robin Hood generation, if you will, are growing really, investing in a very thoughtful way, whether you like their approach or not. I mean, these are kids that are growing up 18, 19, 20, 21 years old, who understand what a short squeeze is, who understand, what all of these different, a gamma squeeze, all of these different things that, traditionally, typical hedge funds or sophisticated family offices really know about. And so that's going to change a whole new generation. A whole new generation is going to grow up investing, and their children will grow up investing. And so that there's a knock-on effect that is incredibly powerful. And so I think it's all those things. And I think the one thing on the education side that is underestimated is the emotional intelligence. It's not necessarily, it's not book smarts in some ways. It's knowing not to sell when you have when the market's down and you feel very, very bad about what's happening. It's understanding to buy more in that instance. It's overcoming your emotion rather than the book smarts around it. So I think that's what's really interesting, is that you have this generation that's growing up understanding these things, and are really kind of benefiting from this next wave, from this new wave of investing, which I think is incredible in the markets, in crypto, and all of this stuff. So I think it's really starting to change. It's really exciting.
It's definitely, I guess that fuses a bit the education and the access point, in the sense that it's not even just about having that, it's being aware that you need the access in the first place. And there's definitely been that shift. I think it's accelerated, ironically, during COVID, but it's been happening anyway, slowly over time. And it's needed, right? Because you shouldn't just, well, my personal view is you shouldn't just have certain privileges just by virtue of birth. We need to redistribute that and rebalance that. And education is as important as access when it comes. Whilst I remember anyone who's listening in, if you have any questions, please feel free to share them and post them in the Q&A, because I have seen some and we'll be getting to them shortly. So actually, let's get to it now. So one of the questions that one of the members of the audience asked was, would both of you be willing to discuss more about your fundraising journeys and experiences? Because I am a venture scout on the side, and I've spoken to many founders, and I know that fundraising is almost a full-time job and emotionally tiring in itself. So it'd be great to hear, what has your experiences been like? Maybe you could kick this off, Bastian.
Sure, I think it's quite often an up and down over this journey. So since we started with this study financing approach, for us it was clear that we take this study financing as the initial use case for building up a broader vision. I think this is pretty meaningful, having in mind what you would love to create out of this, and at the same time being an operational business as specific as possible, as Feras said. I think this is a balance you have in this specific time. We initially started with business angels that has really deep knowledge into study financing as well as into consumer brand. And that was our first conclusion. That I think then the second step, and I think this is quite often important, so you of course get amazing advisors with these angels, with these investors. But first of all, even if you get better into pitching something, it's about getting a better understanding of your business and know the key drivers. So since you're understanding these things once, or you've improved all the, you show the progress, and this should be your main focus. First, understanding the clear issue, understanding how to solve this issue and show this within the method. I think this fundraising journey will get way easier. And quite often I think this was my experience, which became part of the Axel Springer Plug and Play Accelerator in Berlin. This is an accelerator program where, for instance, the Challenger Bank in 26 was founded many years before. And everything was around, and this team was pretty amazing, but everything was around doing this first fundraising stuff. But in these days, we have no idea, we haven't had any idea about the problem, the solution, and clearly understood the core level we have. And I think first of all, it's about getting deep knowledge about your business, doing this for half a year, really deep dive into all these metrics, validate these metrics, talk to your customers, and then the rest will definitely follow if you have the same method from our perspective, because we visualize this growth with study financing became also growth from 4-digit monthly revenue to mid-6-digit monthly revenue with a 7-people team in last year. And then, of course, things will get easier if you're profitable. And then starting your next step with the overall banking approach. It's never been so easy to raise a new round and select the partners you want to work together with. So first of all, I think my personal expertise or experience, please take care about these issues, problems from a customer you want to solve and understand the core levers. And then this fundraising will be definitely easier, and it helps you to build up significant companies. Otherwise, it's maybe the opportunity that somebody says, yes, I want to be part of this, but then you have money and still do not know what to do. So this fundraising is nothing you do for yourself. It's more or less you do this for your vision and for the overall success, and this should accelerate you. But if you do not know how to accelerate your business, it doesn't make sense to get more money. So first of all, doing your homework, and this is the best experience that we've made.
Yeah, I guess to add to that, from the pitch decks I've seen and the startups I've advised and founders who are going through the fundraising process, some of the mistakes I see founders make frequently is not really clearly defining the problem statement. And that's especially important when it's a typically ignored segment. I always say, if, for example, you're to go onto the street and you're to pitch your slides and your deck to someone who has no idea about tech, no idea about your segment, could they repeat back to you the key information? If they can't, then it's not clear enough. You need to work on it. And the problem statement is usually one of the downfalls. And equally, I guess, just as you said, Bastian, that then follows through to how do you validate your idea? Because ideas are cheap. Loads of people have ideas. How do you go about showing that it's actually a valid idea, that there's a need for the problem that you're solving? And just as a reminder to anyone who's listening, that doesn't just have to be pure traction metrics. It could be, for example, saying we've achieved this, or there's this indication in the market which shows it, or these are the partners we've got who have this knowledge and can validate this, even if we can't directly because we don't have a product in market yet.
Yeah, and it makes, I think, founders' life a way easier for yourself, having the security that you really validated something, and not like you're living within your dream and believe that this could be a cool, amazing company, having these millions of evaluations or billions of evaluations in your mind. First of all, it's like getting the security on your own that you really believe that you're solving something meaningful. I think this also helps from a daily perspective.
And Feras, what about you? Talk about your fundraising experience. You're on mute.
Sorry, I think Bastian hit on a couple of good points there. I mean, look, I think on fundraising, it's a means to an end, right? I mean, what you're trying to do is build a great product, build a great business, and you need, I think one thing is that the less you have to raise, the less you have to dilute and, give away to investors. And that ultimately is, it's just a good ethos to live by. I mean, spending less money is ultimately a good thing. And I think that gets lost these days. I think what people want is bigger rounds, more money. It's all about the check size. And I just don't think that you need that in many cases. I don't think that should be the goalpost. The goalpost is kind of like build a great business, right? It's don't get lost in that whole rhetoric behind trying to fundraise and do all that. And this was a great lesson I actually learned through YC, which I had a completely different mindset going into the program, and then when I came out, it was just completely different. This is very much about product market fit and not so much about how much money you raise. Anyway, I think you just fundraising is a kind of a necessary evil. You don't want to spend as much time on it as you have to, and just try to raise as much as you need, and do it incrementally. I think but try to do it efficiently. I think this is the most important thing.
Really respect about both of you is that you go beyond. I guess fundraising in itself sometimes is a vanity metric, and unfortunately that's what you hear about, right? When you're reading about startups, that's how their success is usually measured, when in reality you could have a startup that's raised many millions and has 0 customers. It happens, and isn't really solving a problem that anyone has. And so I really like that both of you have touched upon that in your answers, because it's so important. And unfortunately, the way in which success is typically painted in the tech scene is that it's about fundraising, and somehow that your success happens overnight, which it definitely doesn't. So thank you both for that. I'm conscious we're coming up to the last few minutes. There is one other question in the Q&A which I don't want to ignore, and that's actually directed at me, which is about in the fintech space and whether I faced any challenges. Personally, no, I've never really felt that, because I'm just like, I'm here to do a job. I will do it well. I'll do it to the best of my abilities, and then I don't really worry about the rest. I have felt at times, I have definitely felt a bit as though I've had to show people that I do have the knowledge, but that wasn't so much linked to my gender. I think that was linked to the fact that I sound very British and I'm operating in non-British markets. And equally, I look very young for my age, and so people assume that I have very little experience or knowledge, but that's definitely a trend that's changing anyway, because there's some amazing young people who are killing it out there. So not so much around my gender, not to say that doesn't exist. I'm sure there are other women who have had that experience, but not for me. I don't know if you were about to say something, Bastian, when I said about the young, or whether you just nodded in agreement.
I'm 24, so what should I say? I started with 18. I don't know what young means for all of us. I think young experience is a good description, but nothing more.
Any consolation, you're both very, very young to me. I'm 36, so I'm what they call a boomer.
Oh, wow. No, I'm joking. It doesn't make any difference at all.
Great that you understand our language.
Must have been a struggle getting onto Hopin.
Exactly. It was.
So my final question, if you could do really short answers because we've got 2 minutes left, is what, out of interest, what do you think are going to be the biggest challenges in both of your drives to ensuring financial inclusion for your target user group?
Yeah, I think the most important one, and it's not related to the market, is finding the right people to fulfill this mission together with us. I think this is the biggest challenge you can have as an early stage team, getting these guys that drive this vision together with you and have the capabilities over the next years doing this together with you. I think this is also a significant challenge you can have. I think everything else we can validate and find opportunities, but only if we have the right brains on our team. So feel free to join if you believe that this is a mission you would love to fight for. And I think this is a main case why we can stay on this market, not finding the best people for our team and finding the best talents. Definitely this, especially in these early stages. Because now we're setting up the foundation of everything. If this is more or less good, but quite often not enough winning such a competitive starting situation. So this would be our biggest challenge, I think.
I have to agree with that. Actually, I think building the right team is the most fundamental thing that you can do. Getting people aligned to the mission and keeping them, pushing forward, I think is incredibly important. I think, regulation in some cases and financial inclusion it's not insurmountable, but sometimes it moves a little bit slower, and that creates sometimes more of a barrier than it does not. So I think these things are, we have to live by them, but yeah, I think it's sometimes an issue.
I mean, thank you both of you. This has been a really interesting panel. I've enjoyed myself. Hopefully the audience has as well. And I don't know if you guys are hiring, but for anyone who's listening, and if you do find either of their startups interesting, just pitch yourself. Even if they aren't hiring for a proper role, just like most of the things I've gotten, I just pitched myself. No one was hiring. No one asked. No one advertised. I just said, this is what I want. This is why I'm good at it. And this is why you need me. And people like that. That goes a long way. And you may get rejected, but you only need one person to say yes at the end of the day. So if you like Wajve, if you like Baraka, you know their names clearly written for you here. Drop them a message. And they seem like very friendly people, and you never know where it may lead to. So thank you, everyone.
Thank you.
I encourage that. Yeah, thank you. Please, we are hiring, so just reach out. Find me on LinkedIn.
Thanks a lot.
Thank you, Maya. Thanks, guys. Thank you.
Thank you. Have a good evening, everyone.